So this is what we're going to talk about. Obviously, there's loads to talk about, but we are just going to focus on England today. Some of the changes do affect the other devolved administrations, but we thought we'd need about 3 hours to go through if we start saying this just applies to Wales, this just applies to England. So we're just going to focus on England. And I think my first disclaimer is that we did ask the SLC to deliver this, but they seemed very reluctant for some reason. So they did send us loads of materials, which obviously Phil, Emma and I have changed. So just really to give you the heads up about that. So what we're going to talk about are the new figures, very headline figures for 24-25, and we'll link to the memorandum. Changes to the Disabled Students Allowance, changes to the way the household income is collected and verified, which some of you may or may not be aware of. Going to touch on the financial hardship process. We're also going to talk about pre-settled to settled status as an event. So basically what we asked about was how students, EU students with pre-settled status move to settled status and how that will impact on their funding, which I'm sure you're starting to see in your institutions now. We're going to touch on one of my favourite topics, which is the change of seasonal intake. Phil's going to update us on the Lifelong Learning Entitlement. And then we also wanted to give you an update on postgraduate loans. So for people that may have had studied on an undergraduate course with an integrated master's element. So we'll update you on where we're up to with that. We've had an update from the DFE. Put anything that you're thinking about, want to ask about in the chat, and we'll hopefully come back to it at some point. And it's really important to note this is being recorded, and you will get the recording some point next week, that all this stuff we're talking about today is right as of today. So we know particularly around the LLE, things are changing all the time. And we know student finance change the way that they do things all the time. So just really a bit of a disclaimer when you're recording things, it's not set in stone. Okay. So I'm just going to touch on the funding rates, which I'm sure you know about. The maximum tuition fees for students from England have been maintained or frozen, if you prefer to use that term, for the 7th year, which obviously does have an impact on university finances. Possibly good news for students, though. We're looking for good news stories all through this session. So full-time remains 9,250 maximum, and part-time 6,935. So I'm hoping most of you know this. Students can borrow the maximum, and the student finance tell us this is the easiest part of the application. 99 point something percentage of students apply for this. We've put a link to the memorandum here so you can look at all the figures for all the various cohorts. So when you get the slides, you'll be able to look at them. The maintenance funding has been increased by 2.5%, which I know there has been a bit of an outcry in the sector, because obviously we know that with the cost of living crisis, things have gone up so much more than 2.5%, if only things had only gone up 2.5%. So these are the maximum loan rates, which I'm not going to talk through, but you'll get this information when you get the slides. And postgraduate funding has also been increased by 2.5%. So, which obviously is a challenge, because for students from England, it doesn't go anywhere near covering what the actual cost is. So we've put the doctoral loan rate in there, the maximum postgraduate master's loan, and also I put in the Disabled Students Allowance maximum rate there. But we are going to talk about DSA a bit later on. Phil, did you just want to come in about the House of Lords thing here?
Yeah, I just popped a link in the chat, actually, Lynn, to that web page. If you do follow that link, you will need to be a little patient with it. You'll need to scroll down before you get to the relevant part. It's a good half or 2/3 of the way through the document, I think. But it's a particularly scathing attack really by the House of Lords on the DFE for not giving real terms increases to student finance rates. So that's in the context of what's been happening over the last few years, and it's clear in that in what's written there that they are expecting the DFE to make up the deficit at some point. But of course, the jury's out as to whether that will actually happen. But fingers crossed, a change in government, if that does happen this year, might coax things in the right direction again.
Thanks, Phil. And I think if I remembered correctly, they were saying about the methodology of how they calculated it was flawed, wasn't it? And but anyway, it is an interesting read if you've got time. Okay, and I just wanted to touch on loan repayments because I'm sure you're aware that last year, so the 23-24 saw the introduction of this new plan, Plan 5. So students won't have to make repayments till their income goes over 25,000 a year, and the threshold's been fixed until April 27, which it then should increase in line with inflation, I think. Sorry, if I read the next one. Yeah, go up with inflation. I think when you read about Plan 5 initially, you think, oh, there's only been a slight tweak around the edges. But actually, the changes are phenomenal because the repayment term has been extended to 40 years. And depending on which article you read, what that means in real terms is that students are going to pay back so much more money. And depending on which side of the fence you're sitting on, some people will think that's a good thing. Students should repay what they've borrowed. But I think from a student's perspective, there's definitely a real shift here towards what we talk about it being like a graduate tax, but we can't call it a tax, so we still have to call it a loan. So students will pay back significantly more for longer. And I suppose the good news thing is that the interest rate has been changed. So it's the retail price index. So it's not real inflation. We've gone back to what it was some time ago, the retail price index. But there's a couple of links there which you might want to read. Lots of stuff on Martin Lewis if you want to read that. Really depends on what type of information you want to get from it. Okay, Phil, you're going to do this bit.
Yeah, I was just going to add there, actually, there's some really useful modelling that the Institute for Fiscal Studies did around the Plan 5 loans, which shows that they're likely to have the most impact on middle earners. It pretty much ties in with anybody who's been in higher education and might head out to a public sector kind of career. They are likely going to be the students or the graduates who repay the most under Plan 5. Of course, with the inflation the interest having been reduced to the rate of inflation, as Lynne has just described, those more affluent students can take advantage of that and make early repayments against the loans.
And depending on which article you do read, so sorry, Phil, they're still saying it's still only going to be around 55% of students that will, on the modelling, that will repay their loans in full. So that still leaves nearly half of the students that won't repay. So Lord knows what the next change will be. Anyway, we'll just leave that thought there.
So thanks, obviously the rates for DSA have been upgraded for next year. So that's the single rate now that we're getting used to seeing year by year. It's been like this for a few years now. So it's been upgraded to that 26,948. Although important to note there that there is that further support for disability-related travel costs. But all of those rates have been conflated into one now, and that single rate applies equally to full-time, part-time, and postgraduate students. Thanks, Lynne. So the main changes that are occurring from 24-25. Now, It does say no impact on 23-24 entrants, but it's not entirely true. Anybody who's never applied for DSA before, whether they're a 24-25 entrant or not, will be affected by these changes. But if you're an existing 23-24 recipient, an existing DSA recipient prior to 24-25, the impact should be less. The only real difficulty an existing DSA recipient should have is if their assessment centre no longer exists due to the new arrangements coming in which case they will need to deal with SFE directly. But as it says there, SFE will continue, and SFW for that matter, will continue to do the eligibility checks and process an application once it's received. But once that has been done, they will be signposted to a regional contact. And this is where the changes begin to come in, because they have appointed 2 organisations to act as assessment centres nationally. So there are those 2 organisations are Capita, who are overseeing the northwest and the southeast, and the definition of the southeast is anything south of the Humber on the eastern side, and Study Tech will look after the northeast and the West Midlands down into the southwest. So this is seen as being a means by which SFE are having sight of the end-to-end process. They feel like they've got a better grip on how this is being processed going forwards. Clearly, they are setting out with an objective to reduce processing times, but you know, the cynic in me says, well, if you're looking to do that, why did you appoint Capita? But there we go. Let's see how they do. And I'm sure that they will achieve value for money, because essentially these 2 organisations have put in extremely competitive quotes, which essentially has seen the entire sector shift to and a lot of assessment centres that were serving the sector are now just ceasing to exist as a result of this change. There is a link to an article at the bottom of the page there. It's important to recognise that these changes establish the 2 companies as assessment centres, but it also establishes a new regime for the supply of equipment. They've greatly reduced the number of equipment suppliers that will be authorised to provide under DSA. And again, those arrangements will be managed by the new assessment centres. The changes do not have an impact on non-medical health providers yet. And that is what that article is referring to, because a consultation has just been announced to improve non-medical health for the sector. But for this, the suggestion here is that DSA no longer manages non-medical help at an individual level for students, rather the funding, the budget stream for non-medical help is given over to individual institutions to manage that support locally. And my gut reaction to that, certainly from the context I'm working in here at a small institution, is that those changes, the impact of that is going to be pretty massive, really. Not least because it will it places a lot of emphasis on that being a real terms like-for-like exchange of support from DSA to those institutional budgets, and I guess we can all have a question mark in our minds as to how likely that is actually going to be. But yeah, so that consultation, if you're not already aware of it, or perhaps if you've got any links with your with disability teams at your institution, you might want to make sure that they are aware they are closing that in July this year. Thanks, Lynne.
Thanks, Phil. Interesting that you think they're going to get a better grip on things, but not necessarily positive. Sorry, I've got a new computer. I've mentioned it before. There we go. So Emma, you're going to talk about this change to the household income.
Yeah. So there's been a change to how the household income information is gathered and verified. This is good news. It did have a bumpy start because it did start during 23-24. I can't quite remember when, which actually meant that quite a few students got sort of stuck in the system, but SFE fixed that, and now rather than, so you know, when I used to talk to parents or partners at open days, I'd be saying you've got to find your P60 from the prior tax year or your tax return, make sure you enter all that information exactly as it is, find information about other taxable income that you've had, make sure that's entered correctly. Now all parents and partners are asked to provide, in the most part, is their national insurance number, and SLC take that, check with HMRC, well, here's the national insurance number, what was their income details for the relevant tax year that we need to know about, so the opportunity for errors and things not matching is greatly reduced. What they check in that kind of checking with HMRC is taxable income from employment, any benefits, state pensions. There is still part of the form where parents and partners have to provide information about private pensions, some of the things like if they make money from letting out properties, and information about children that they have, so the relevant deductions can be made. But really this is good news because there's less opportunity for error and more opportunity for it to be a quicker process. And I don't really know if we are seeing it, or because I'm certainly not hearing of as many problems that students are having with the household income assessment. Hopefully this is as much good news as we're hoping it is. The current year income process remains unchanged. That's still a form they need to fill out with their estimated costs, which obviously still carries the same element of risk when you're estimating your household income. And that's that really on changes to verification of household income. Bit of a good news story.
So the students that were getting stuck when the system changed over, does that all seem to be sorted now?
Yeah, that was a particular error with an error code, and we've moved on from that. We've not seen that again. I think it would be interesting to know with the issue that we've got at the moment, where we know that some students have been incorrectly assessed as having household income in the millions, if these were students who were assessed on the old process where information was entered into a form, or if this was part of this new sharing via the national insurance number, because if it is, then obviously that is a problem with this, but I suspect they all predate that, but that's still under investigation.
I suppose looking forward, we'll be thinking about when those huge, at the moment, I'm not going to use the word quiet because it's certainly not quiet, but come August when those files to HMRC go over that are massive. I know the size shouldn't actually impact on their accuracy, but we probably just need to wait and see how that works. I mean, it sounds like a good news story, I agree, because like you, all those conversations about what you should include, what you shouldn't include, with the top topic at open days, weren't they? And I know they still will be an interesting topic, but there's less room for error if it's just if they're actually getting the information from HMRC.
Yeah.
Thank
Oh, Lynne, I think you've just gone.
Yeah, I did. I touched the mute button because I've got a new computer. I don't know if I've mentioned this. I've got a new computer. Okay, so just wanted to update you where we're up to with the financial hardship process. So we've been advised that at some point in the 23-24 year, I'm sure you're more aware of when this happened than I am, that the process of verifying hardship changed And the 3 forms, so there were 3 forms for the different purposes, which I'll come to in a minute, have been consolidated into 1 form. So hopefully that will remove that margin of error where people are being sent the wrong forms. Don't forget, students aren't requesting a wrong form, they're being sent a wrong form. And we certainly had instances where students from England were sent one from Northern Ireland, or and then they wouldn't accept the information. So hopefully if there's only 1 form, that will remove the margin for error. The form will be sent to students by email, but still only when the student's spoken to SFE. So these forms are not available to download by students themselves. And whoever they speak to in student finance has to agree they meet the basic criteria. And obviously the conversation still goes back to first of all, how do they know that there is a process? How do they know they need to ring up? Unless they come and speak to us, then how will students even know that this process exists? Undergraduate students can upload the form, and they can also now upload the supporting evidence. So there's no need to post anything. And I know certainly on the NASMA mail base, you might have this discussion in your institution. People are saying, well, I still post all the paper stuff off. I send it by recorded delivery. I want to make sure it gets there. And actually at the stakeholder groups, student finance is saying, please don't send us duplicate documents because it's causing issues. It's causing a backlog to their workload because sometimes they're getting things 2 and 3 times. So the students shouldn't need to post anything. And the hoping bit by moving most of the process online, the enhancements will mean that students can get a decision quicker. And if there's anything missing, they should be contacted in a more timely manner. So just to go through the various things that the process can be used for, which some of you will have seen this slide before. So deferring overpayment recovery, this is one of the main things until the next academic year. So a student suspends some point in the year, comes back the following year, and because they've suspended, their funding stopped. And student finance have to recover, the student support regs say that they must recover the recovery at the first available opportunity. So if they can evidence that recovering that money would put them in hardship, the student can evidence that, then they can defer that recovery until the following academic year. And then they can reapply. So I think some people think, well, I did that last year, I can't do it again. They can reapply. And apparently on the letter that they get about the recovery being suspended, it does say they can reapply, but I don't think they're reminded about it. So that would obviously be something that you could probably help them with if you're aware who these students are. So the second point is continue to receive payments during periods of suspension. So a student suspends in February, tied into a rent contract, they can apply to continue to be paid throughout the suspension period if they can show that by stopping the money it would cause them extreme hardship. Again, students that aren't tied into rent or mortgage contracts are very unlikely to continue to be able to receive the money during periods of suspension. It does say that in the guidance, rightly or wrongly. The rent or mortgage thing seems to be one of the key things that they're looking for. Moving a loan payment forward, this is used a lot less than the first 2. So, for example, a student might need to move house due to an emergency. I don't think it's just, they want to move house, but if there's some reason why they have to move or something else has happened, the loan's not due till April, they can ask for the payment to be moved forward. And the last one, which is a bit of a strange one, really. Students withdrawn from study and been awarded a grant, they can apply through the hardship process to not have the grant recovered, but they can't request this for the loan. That's in the regulations as well. So these are the instances. and the students can ring up and request the one form now. And the one form should cover them. If they're applying for more than one of these, it should cover all instances. Okay, Emma, you're going to cover events.
I am. So I think what we're all quite familiar with in the most part is that for a residency status, a student usually needs to have held that status prior to the start of the course, along with some other criteria. But there are changes in residency statuses that are classed as events, which can change a student's entitlement to funding. I remembered when I first heard the term event, I was like, well, should I go somewhere with a cake and a balloon? But that's just what this term is, and I'm familiar with that now. So there've always been statuses or circumstances that are classed as events that will change a student's eligibility for student finance. Some of them are here. But the change in particular for 24-25, if we can look at the next slide, is that from academic year 24-25, students who are granted settled status for any reason will be able to become eligible as an event, provided they satisfy the other eligibility requirements for that status. So they are removing the requirement for students to have that settled status on the first day of the first academic year of the course. So I think the easiest example of this that we might be familiar with is a student who has limited leave to remain and hasn't qualified under a long residency category for funding, and they're granted indefinite leave to remain. Let's say it's me. I'm in the second year of a course and I'm granted in April 2024 indefinite leave to remain. Usually, because I didn't have that status prior to the start of the course, I wouldn't gain any eligibility for funding. But actually what this change means that I would be able to apply for funding for 24-25 because there's now no longer a requirement for me to have that status prior to the start of the course, provided that with indefinite leave to remain as the status. I've been ordinarily resident in the UK for 3 full years prior to the start of the course, and that I'm resident in England on the first day of the first academic year of the course. I wouldn't be able to apply for funding for 23-24 because this is just from academic year 24-25. And if we move forward a slide, if, for example, I had limited leave to remain and I was granted indefinite leave to remain, which gives me my settled status in January 2025, I wouldn't be eligible for tuition fee support for 24-25 because I didn't get that status within the first 3 months of the start of the academic year, presuming my course started in September. But I would be eligible for maintenance support and supplementary grants in the following term, the term after the one in which I gain that settled status, and then moving on to the subsequent academic years, I would be eligible for full funding. So that's really the change that we're seeing from 24-25 onwards. There is some quite good examples actually in the assessing eligibility guidance 3.38, students who become settled from academic year 24-25 on page 83. I think now perhaps we now need to unpick, well, how do these students know? Are Student Finance England telling them? Are they contacting students who have perhaps been told you won't be eligible for funding for the duration of your course because you don't hold a settled status prior to the start of the course? Are they going to contact these people and say, well, actually, if you gain settled status now in 24-25 onwards, you may have some eligibility? Is that our job to identify these students? I know I saw some in 22-23 who had been granted indefinite leave to remain, and now actually if they're still on their course, they will have some eligibility for 24-25, providing they meet the other criteria. how do we identify them and make them aware? And obviously, in some instances, this could change a student's status to home fee status during the start of the course, and that obviously needs to be managed within kind of the records and finance tuition fee charging parts of the institutions. And I think that was a very whistle-stop tour through some more good news, essentially, because this means more students can have some funding. I don't know if I did that a bit quickly, but
no. I think we just need to be clear that residency is so complicated, isn't it? And I think you covered that brilliantly. Thank you. That this is a change. So if you're not aware of it, really, we're flagging it up here. You might want to read this guidance. I'm hoping your registry and fee assessment teams are aware of the change. And I would think that universities in the main should be able to pull off some sort of report of students' residency, because we have to keep copies of the documents, don't we, for the fee status. So we must have records. It's just every university is going to approach this differently. And obviously there might be some really good practice out there going forward, which hopefully we can share. Yeah. Because we wouldn't know the students that aren't, as in money advisors, we wouldn't know who these students are, would we?
No, otherwise, and I don't think before they will ever have been encouraged to really let us know of a change unless it's going to affect their fee status. And we wouldn't have encouraged that before, because this is a change from 24-25 onwards.
So definitely have a read of the guidance, and I mean, have a chat with your registry teams or whoever it is in your university, because hopefully you'll be able to pick up a few students that will be eligible next year. Anything else to add there, Phil? Thanks, Emma. No. Emma said she was only going to do the good news topics. Okay, so this is definitely a whistle-stop tour of all the changes. So the change of seasonal intake and the multi-academic year assessments isn't a change, but we just really, we know this is an issue that comes up all the time. We just thought we'd pull together a couple of slides, and we did ask SFE for some examples, which we didn't get, to be honest. So I'm just really going to touch on this, and possibly we could do a whole session on this, not necessarily us, Emma and Phil, another time. So when a student changes to a later start date of a course, it's classed as a change of seasonal intake, as I'm sure you're aware. But the Department for Education have said the whole time that if you change your seasonal intake and not your course, this isn't classed as a change of course. So your university can submit as many transfers as they like for a student that's changed from a September or autumn start course to, for example, a March start course. And nothing will happen to that student's record because it's not classed as a change of course. So if we look at this example, John starts on a September course. After 2 months, wants to change to the April start of the same course. Because it's got better placement opportunities, there might be another reason. It's not classed as a change of course. And while your institution may say, John, that's fine, you can switch to the April, March, January calendar of this course, the funding will never swap. So, and I know there's been stuff on the NASMA mail base about manual workarounds. But when you've got a large number of students that this impacts on, that becomes a really big job. So in this instance, if John moved to the April start, your institution would still get the tuition fees in line with the September start, so the 25, 25 and 50%. And John will still get his money in line with the September course, so September, January and April. So nothing will change. So when he's had his money in April, that's then got to last him for a long time. Although his seasonal intake may have changed, it's not classed as a change of course. But where a student transfers to a different course with a different seasonal intake, this is classed as a transfer. So John, obviously I'm very innovative with my names for my case studies, starts on a September nursing course, but after a few months wants to change to biology with a January start course. He could be transferred by his HEI, subject to academic approval, etc. And his payments then would be in line with the new course calendar. So he would switch to a January start. This would also be classed as a multi-academic year assessment, as John's application would then cover him for 2 courses. So he started on the nursing course in September. Your university transfers him over to the January biology course. And that application then will cover 15 months in effect, won't it? It'll cover him from the September to the following December. It's worth noting that this would be classed as 2 years of study. So obviously I know Phil's itching to jump in there, saying with the LLE it's slightly different. I can see it in your face there, Phil. But under the current rules, this would be classed as 2 years of study. So should he then transfer again, he's already had 2 years of funding. Okay, so if the student withdraws from a course and wants to return to the same or different course on a different calendar seasonal intake, then that would be allowed, but the student would have to reapply from scratch again. So again, if we go back to the example of John, starts in September, wants to change to April, he decides to leave at Christmas and reapply rather than transfer over. And I do think that is one of the ways that some universities have, I'm going to say, got round it. That sounds devious, but I've found a workaround that the students are withdrawn and then reapply, but that obviously messes up a lot of other things in your records. The student would be required to reapply for funding as a new applicant, and again it would still be 2 years of funding. If the student suspends and returns to a later seasonal intake, so we couldn't get a definitive answer on this from SFE. What they said is in the majority of cases, they'll remain on their old payment schedule. So their calendar won't change. And that was certainly my experience. You may have come across the odd student, I'm using the odd student in the generic term, that has been moved over, but I never found any students that would be moved over. They just remain on their old payment schedule. If a student needs to do a part year repeat, because this was the most common question, and wants to progress to the course at a different point, that wouldn't be classed as a change of seasonal intake. So example, if we go back to John, he fails some of his modules at the end of the first year, so in the summer term, June. He's got to do them in the first first term of the next year. So he could do them in, say, August, September. And then he wants to, rather than waiting until the following September for the course to come round again, after he's done his resets, he wants to rejoin the course in January. That would not be permitted. It's not classed as a change of seasonal intake. If your university permits them to do that, you just get yourself tied up in knots, because his payments will be on the old calendar, your tuition fees will be on the old calendar. It is possible for students to have more than one application in an academic year, and an application that covers more than one course. We've talked about that already. So more than one application would be things like a mode switcher, which isn't my terminology. That's what Student Finance have come back with. So, for example, a student that goes full-time and then wants to study part-time, they would have to apply again. So they'd have 2 applications in for the same year. They'd have to be withdrawn from the first course and reapply on the second course. Students that withdraw, students who complete a course and start another one, and students that maybe move between undergraduate and postgraduate funding. So just some fast facts, really. They can't be funded for 2 years of a course that start in the same academic year. So a student on a course that starts in August, the second year can't start any earlier than August. They can't be funded for more than one course at the same time. So this has come up as a bit of a recurring theme. On a 1-year master's course with a September start, can't be funded on a PGC course with an August start, because that falls in the same academic year. That would be classed as being on 2 courses in the same year. Okay, and there are some definitions here which I'm not going to read out, but they might be helpful for you when you get the slides next week. Okay, Phil, over to you.
So I'm kind of coming in assuming some knowledge of the LLE to date in terms of how it's been set up. So we're not going to get into the detail of the workings of the LLE. I suppose just in terms of recent announcements, if you haven't heard, it's no longer the Lifelong Loan Entitlement, it's now the Lifelong Learning Entitlement. The biggest news, I guess, is what's just occurred this week in terms of the announcement regarding the delayed start for the LLE. And this is great because myself, I'm party to the HE advisory group, which is the stakeholder channel the SLC is using in terms of LLE development. And we heard nothing of this. This just got announced to the sector as a whole. You know, here we go. This is what the DFE have decided. So it will now be the case that the LLE will only start for courses beginning in January 2026 or later. So that 25-26 scenario, that 25-26 academic year, any courses starting in September 2025 now will remain on the existing arrangements that we know and love, and the existing system that we have in play now. So that's going to create an interesting scenario that year, because we're going to have potentially, for those seasonal intakes that Lynne has just been talking about, we're going to have students on 2 systems that year who have begun study that year, which is quite an unusual twist. I'm not sure we've ever had that before. So it sounds as though those later entrants in 25-26 will almost become a little bit of a pilot group of their own. We'd expect that the vast majority of students will be starting in that September to December period. So those remaining students who are coming in the latter half of the academic year, it'll be interesting to see how things pan out for them. What this doesn't change is that the 25-26 scope of the LLE is those higher technical qualifications, the HTQs, which we understand on the ground, those are likely to be HND and HNCs. The majority of students studying will receive the LLE, will be able to apply for the LLE from January 25-26, but the full-blown LLE will only apply to those HTQ courses. So suffice to say that if you are studying on a BA Honours or BSc Honours course with a January 2026 start or later, you're unlikely to be affected by the full-blown LLE. It's going to look more or less like the existing arrangements in any case. That full rollout of the LLE for honours degrees isn't likely to start until academic year 2027-28 for the majority of institutions. So that hasn't changed. So next bullet there, otherwise very little has been released. There's been some snippets. So we have heard that there will be a compelling personal reasons mechanism that's going to be similar in spirit to what we know under the existing arrangements. And the other thing that they've snuck out onto the gov.uk pages is confirmation that any student who is repeating part of their course, well, those repeating elements of study are not going to be subject to the course cap. So you'll recall, hopefully, that the LLE is going to be a credit-based item of funding. So in terms of that funding for fees, it's going to depend on the overall credit rating of your course. So if you're on a 3-year undergraduate degree, you'll have 360 credits, and your LLE will be in respect of those 360 credits. If you repeat, any repeat elements of study won't be subject to the 360 credit cap for the course. In effect, they'll be deemed as an exception, and you will be allowed to access funding for your repeat study in addition to the LLE that's available for the credit value of the course. I hope I've explained that sufficiently there, but it basically means that the repeat elements of study won't be deducted from the 360 credit value for the course, which if they did that, that would actually leave you short. If you had a 30 credit module that you were repeating, you had a resit, that would add to the overall credits of the course and take it to 390, but you'd only receive an LLE against 360 credits, so you'd be 30 credits short. We're told that is not going to be an issue. You're going to be allowed the funding to study those repeat elements of study on top of the standing credit value of the course. So with that in mind, do keep an eye on those gov.uk pages, because that kind of got released without any big fanfare around it, but it is there now as part of the guidance that's been given. We do need to remember this is England only. So the LLE is an English affair. It's not being rolled out in any of the other home nations. The most, I suppose, the most important aspect of that to bear in mind is they are introducing new systems to support the LLE, but that means that the old systems aren't going to disappear anytime soon, because those are going to be needed to service students from the other home nations. So whilst they are, for example, set to introduce a new version of the Courses Management Service for LLE, CMS, the old version of CMS will continue to be around, and the two systems will need to be serviced side by side by institutions in England. So, and for that matter, I've not really thought about it that way, but I expect that the other home nations are going to need to do similar, aren't they? Because they will have English students coming to them. So there is a list of specialist subjects due to be published later this year. This really helps to define those exceptions within the rules. So the spirit of the LLE, what we already know is they are seeking to fund any course which is currently funded by the higher education support arrangements. So this list of subjects, which is due to come out in autumn 24, really helps define that, but it will also help define some of the FE subjects that are switching into the LLE from the Advanced Learner Loan, which in effect will cease to exist for those FE Level 4 and Level 5 courses that are currently serviced by the Advanced Learning Loan. They've also promised us information on an alternative student finance package for what's been termed Sharia compliant student finance, and that's been promised for late 24 as well. Apparently there has been real work undertaken on this, which means that there is actually a product that they are set to unveil. But bearing in mind we've been told this since 2009, let's not get too excited. But apparently it is on the cusp of being revealed. I suppose the big news is that the loans company have been asked to undertake a series of roadshow events during the summer, and we're told that these are likely to open for bookings in the last week of this month. Again, as Lynne, I think, said earlier, this is a question of the DFE stepping back and asking the SLC to roll this out. And I think it's fair to say it's something that they're not particularly comfortable with, given the dearth of information that the DFE have actually released around the LLE to date. But nevertheless, they are set to go ahead. Little bit of section there just on some of the links around the LLE. So do use those should you be unfamiliar with those at the moment. In terms of development, we through that HE advisory group, we've heard that the loans company are currently building the systems to support maintenance payments. So that's the phase that they're moving into, but that has been hampered by the fact that the DFE have given them insufficient information about how they see those maintenance payments working. And that has led SFE to compile a list of queries that they are sending back to the DFE for clarification on policy intention and what exactly it is they're looking to build. Now, at the last of these advisory group meetings, they basically appealed to the sector to assist in that drawing up of inquiries, and we did undertake a bit of activity through NASMA and collected some responses from NASMA members, and we forwarded those on to SFE for consideration. I've actually heard back from a colleague at SFE this morning. They are set to include some of the questions that NASMA members have raised are going to be included in an FAQ document, which is going to be available through those LLE resources that are listed on this page. And any of the genuine policy queries that haven't already been covered by the SLC are going to be added to those questions that are going to be forwarded onto the DFE. So thank you to anyone who has participated in that to date, because that is making a real contribution towards getting these policy queries raised with the policymakers at DFE. I guess on the back of today's meeting, if you do have any burning questions about LLE, if you would like to forward them through, certainly to myself or Emma, I'm sure Lynne would love to hear them as well, but we'd be able to compile them and send them through the same channel if there's anything additional raised. Thanks.
Thanks, Phil. So do you think, I know the list of specialist subjects and the alternative student finance package, they've been saying late 24, autumn 24 since, well, for a while now, haven't they? Do you think now they made the announcement about the delay to January 26, these may also be pushed back? Haven't you got an option?
I think these are highly dependent on the DFE more so than SLC. Okay. I mean, I have to say, you know, there's a good number of institutions involved in the HE advisory group, and there is a lot of sympathy in the room for the position SLC are currently in, because it's clear that they've been given a very challenging timeline in terms of revising their structures and their systems, but the detail in terms of how LLE is expected to be delivered, particularly on the maintenance side, is just simply not there yet.
Okay, thanks, Phil. I'm conscious of the time. We've got one last, oh no, we've got two slides. Emma, do you want to just touch on where we're up to with the PG loans?
Yes, I can go quickly.
Thank you.
And we're finishing on good news. So we started to realise, I think last year or the year before, that the student loans company were assessing students who had been on an integrated master's course, but who had not completed the master's, and perhaps they hadn't got that qualification, or they'd left at the end of the undergraduate level study part as ineligible for master's loans, even when they didn't get that qualification or even when they didn't study on the masters. And we asked for clarification of this, and DfE said, yes, this is the correct interpretation of that policy, and this is how it should be applied. And if we go to the next slide, DfE gave it more thought, and that wasn't off their own back. That wasn't a slow day by the water cooler. That was based on money advisors pushing back through complaints and appeals, through their student loans company, funding information partners, through the stakeholder engagement group, and saying, no, this, interpretation of this regulation is not fit for purpose, and it's really disadvantaging applicants and students. So they had a rethink, and now the policy is where a student previously accessed undergraduate loan support for a undergraduate master's level course but did not achieve the qualification, that previous funding will not affect their eligibility for a master's loan. So they're not going to say, well, you've already studied at master's level, therefore you can't have a master's loan. So they are revisiting the applications that they know they've turned down. Well, they're revisiting applications that they're aware of. They don't think they're aware of all the ones they should be aware of. So if you're aware of some, please raise that through your SLC funding information partner so it can be revisited. And anything that comes in as an application from, was it about a month onwards when this was decided, is being treated under this new assessment policy. So this is really good news and really does show when, we really know something isn't working and doesn't make sense, if we all push back together, that it can have a really positive impact. I don't know if anything, there are a couple of questions about LLE in the chat, Phil, that you might want to take a look at, unless we've got anything else about this.
And I just think quite a timely thing, because this is the time of year when students are thinking, oh, I might not stay on to do the Eng bit of my undergraduate course. So it's quite a timely, for once, a timely thing. So we have these two bullet points, but Emma, do you want to just cover this? Because do you think these are sorted now, or is just the estranged?
Yes. The glitch in the SLC system that was preventing, that had kind of removed students who'd been assessed as a care leaver or an estranged student, kind of fell out the system and they went back to being undetermined. I can see our students this morning, and Phil can see his students. So we assume that they haven't just fixed it for our institutions, that this is fixed, and we can now go back to looking at those students and awarding bursaries and things like that. The initial information that I had through when they thought they were going to fix it the other week was that if your estranged and care leaver bursaries were paid through the SLC system, that the SLC system might not pick up any new ones from while that glitch was happening. So you might just want to check on that if you're in the position where you can do that, and raise that through the Bursary Administration Service contacts if you think there are students who might have been missed and need some input to get their bursary. And issues with a high household income, this is where we're seeing students who, we know last year had a household income of 7,000 and this year have been assessed as having an income of 300 million, and this is still being treated as a priority by the SLC, and there is a SLC stakeholder operations meeting on Friday, and that's on the agenda for that, so hopefully we'll have some more information after that.
Brilliant.